Hi there, welcome to Kneppy Invest. One of the whole points of me doing this channel is to share ideas with you, even on companies that I don't have a position with and not really thinking about buying into in the future. ORCODA, the company I'll be featuring in this video, doesn't really fit into that category. So even though I don't own this company, I have got ORCODA on a watch list, and I am patiently waiting for a potential breakout in the share price. And one of the reasons I'm waiting for that breakout is because this company is operational cash flow positive. They only have a valuation of $25 million, yet over the past 2 years they have grown cash receipts at a quarterly rate of 54%. So there are a lot of ticks, a lot of things going right for this company right now, yet it seems like ORCODA is completely undiscovered by the market. And you'll be able to see that when we look at the chart. The share price just has been going sideways. So I am patiently waiting for that breakout in the share price, and hopefully it comes on good financial news and we do see some higher volume, which would tell me the market is getting excited about the company. So before we look at some of the financial data, and the whole point of me doing this video is actually looking at the September quarter Appendix 4C, before we get there, let's just talk about some facts and what ORCODA actually does as a business. Unbeknownst to me, I've actually been following this company, ORCODA, for quite a few years, about 8 or 9 years, because this company has gone through a significant transition a few years ago. Now, the name I knew ORCODA was Smart Trans, and this was a completely different business. Back then, 8 or 9 years ago, Smart Trans was all about e-commerce in China. In fact, I think one of the things they did was direct carrier billing. And there were also a few other companies on the ASX who did direct carrier billing. I think Crowd Mobile, Mobile and Brace. Yet something happened a few years ago, maybe 4 or 5 years ago, where any company that was doing direct carrier billing had to pivot into do something else because something happened when that was not a viable business model. So Smart Trans had to pivot into something else, and out of that evolved ORCODA. I'll talk about that a little bit more in the next slide. But what did evolve out of Smart Trans was a company that was all about transport logistics and transport solutions. And this company does have 3 divisions when it comes to transport logistics and solutions. It's all about healthcare, and the revenue for healthcare was $1.4 million in financial year 21. Transport, which includes line haul, metro deliveries, field services, revenue in that division $1 million. But by far, the biggest division they have, ORCODA has, is their resources division, which brought in $6.5 million of revenue in financial year 21. After doing a little bit of research in the history of ORCODA, still a little bit unclear about exactly when this company was founded. Now, the reason I'm unclear is whether that Smart Trans company bought sort of that transport logistics business, or they just developed it themselves. A little bit unclear on that, but if we do sort of assume that Smart Trans actually developed the transport logistics divisions, then Smart Trans goes all the way back to about 2000, possibly even before that. Now, ORCODA did not list on the ASX on the 22nd of August 2018. That is when Smart Trans actually changed their name from Smart Trans to ORCODA and was focusing more on the transport logistics business. And Smart Trans themselves listed on the ASX through a backdoor listing via Coolgardie Gold. I think that was about 10 or 12 years ago. The managing director of ORCODA is Jeff Jameson. He has a 7% holding in this company. And one of the major shareholders is Allium Capital, 7% holding as well. And the market cap of ORCODA is not too stretched. For a company that is profitable, actually maybe not profitable, but is operational cash flow positive and growing their receipts at a fairly quick rate. And you'll be able to see that growth in receipts when we look at the cash receipts history in a few slides. Anyway, Market cap, $24 million. That's at a share price of 17 cents. And the ticker code for this company is ODA. And in fact, ORCODA is profitable. They have a net profit in financial year 21 of $400,000, with operational cash flow positive of $300,000. And they grew revenue from $1.7 million in financial year 20 to $8.3 million in financial year 21. And just based off their September quarter, we're going to see significant growth in revenue from 21 to 2022. In fact, it could triple, maybe even quadruple. They have $2 million of net cash. Price to sales ratio, not too high at only 2.9. But when you do look at the other two valuation metrics, price to operating cash flow and PE ratio, you might say that's fairly high. 80 for the price to operating cash flow and 60 for the PE ratio. But it's off a low base. In fact, you wouldn't be surprised if this company could quadruple or maybe see net profit and operating cash flow grow at even greater rates than a quadrupling, maybe 5-6 times. So that would put the PE ratio and the price operating cash flow in a different light if they can do that. So I wouldn't say the valuation metrics for this company are too stretched. I'll probably more focus on the price to sales ratio, which is 2.9, and the fact that they are growing at a fairly quick rate right now. Revenue has increased by 5-fold over the past year. And you'll be really able to see how this company has grown when we compare two Appendix 4Cs 1 year apart, the most recent one, and compare that to one released 1 year ago, which is the September 2020 quarterly report, which was the first quarter of financial year 21. In this quarter, ORCODA received $881,000 of receipts. They were operational cash flow positive by $51,000. However, they did receive government grants and tax incentives of $271,000, and I prefer to take that out of the cash flows from operating activities because really grants and tax incentives are not really operational things. So you do take away those grants and incentives, they were actually operational cash flow negative. Now they're not burning or weren't burning a lot of cash in investing and financing activities. That meant the cash on hand remained at $1.5 million. And if we take a look at the most recent Appendix 4C from September 2021, the first quarter of financial year 22, we can see that receipts from customers have exploded, increased from 800,000 odd to 4.6 million. Now this company is growing, which also means a lot of their costs are growing, but the receipts from customers are growing at a quicker rate than their costs. And that means this company, for this quarter, or the most recent quarter, was operational cash flow positive, even if you deduct the government grants and tax incentives of $228,000. If you deduct that, they're still operational cash flow positive by $500,000. And again, because they're not or don't spend a lot of money investing in financing activities, a lot of that operational cash flow went down to the bottom line, and they increased their cash on hand from 2.5 million to 2.8 million. Now let's have a look at the cash receipts history for ORCODA, and this also includes the period of time when they were Smart Trans. I have data for the company, including Smart Trans, going all the way back to March 2015, and there was a period of time during 2015 and 16 when Smart Trans cash receipts were climbing at a fairly quick rate. And there was a little bit of interest in the market around that time, but it seems like because of maybe the direct carrier billing problems, those cash receipts started to fall quite quickly, and then the company had to pivot to something else, and that's when ORCODA came into existence. They changed the name in 2018. We didn't see any significant growth during 2019 and the start of 2020, but the last 5 or 6 quarters we have seen significant growth in cash receipts for ORCODA, growing from $350,000 in the June quarter 2020 to $4.6 million in the most recent quarter. And if you do calculate the growth rate in receipts over the past 2 years, we get 54%. That is a significant growth in receipts per quarter. You'd be happy if you're getting that increase in receipts per year, but this is per quarter. So ORCODA is growing quite quickly. Now, they are operational cash flow positive. They are growing. They are profitable on a yearly basis. Yet, the market is not interested in this company at all. Be able to see that when we look at the chart. This is the weekly chart for ORCODA, going back to when they changed the name from Smart Trans and ORCODA, and we'll call that period in August 2018 as the time they completely pivoted to their new business model. And you just see through this chart, the share price really has gone sideways. Of course, there's periods of time when the share price increases, period of times when it decreases. That's very normal for any company on the ASX. But if you go back 3 years and look at the share price then and then compare it to now, share price has actually gone down since they changed the name. And over the past year, or since the start of this year, share price has really gone sideways. So we are in a period of consolidation when it comes to this company's share price. The one positive thing when we look at this chart, particularly the volume, is we do see a general or gradual increase in volume. And this is mostly when you look at some of these peaks, weekly peaks. And we've had a couple of weekly peaks in the past few months. In fact, there was about 2 months ago, we saw the largest volume coming in for this company. And then in the most recent week, or the current week, we have seen another peak in volume. And that's telling me that there is a potential increase in interest around this company, but that increase in interest has not translated the share price right now. So no breakout in the share price as we look at the weekly chart. And even if we had a look at the daily chart, you just see the share price going sideways. So I'm not going to show you the daily chart, but at this point in time, what I've done is I've put ORCODA onto my watch list, and if I do see a significant breakout in the share price, particularly if it's coinciding with some positive financial news, and we do see a large spike in volume, that could be the time to take a position in this company, particularly because they are operational cash flow positive, they are profitable, they're growing at a fairly quick rate, and the value is quite attractive at these levels. That's all I have for this video on ORCODA. Really looking at their Appendix 4C September quarter, the first quarter for financial year 22. And you might say, if even though I've told you about my strategy with this company, just having it on the watch list and waiting for that breakout, why don't I just take a position right now and just be patient? Well, the share price could go sideways for the next year, 2 years, 3 years. We don't know. I prefer to wait for some evidence that the market's getting interested in this company, and that could be the beginning of a long uptrend in this company's share price. The only problem is I don't know when that's going to happen, so I prefer just to wait to get confirmation about that happening. I see too many people, particularly a lot of professional investors, say, if you like a company, just buy shares, and you might have to wait 3 or 4 years before you start to see the share price increasing, or you benefit from your thesis of why you bought into the company. And my thinking right now is, why should you be patient for that long? Why don't you just wait for the breakout in the share price? Because there is a possibility the share price goes sideways for 3 or 4 years, and then something bad happens to the business, like it happened to Smart Trans in 2014 or 15 or 16, whatever that year that was, and then the share price decreases from then, which it did for Smart Trans. So being patient, just waiting for that breakout, waiting for confirmation that this company, well, not the company, but the market is becoming interested in this company, is what I'm going to be doing for this company. So leaving it on my watch list and just waiting patiently. If you do have any questions about ORCODA or any other company on the ASX, just leave a comment, your thoughts, your questions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.